Good morning, Monica. Good morning, Yash. Good morning, everyone. Now, I believe all of you have already revised the last class. Anyone who has not revised? Anyone who has not revised? Okay, fine. Fair enough. So, even I'll help you in the revision of the same. Okay. So, what we'll do, first of all, we'll revise whatever we have discussed in the previous class, and then we'll move ahead in the today's class. Okay. Now, we'll go one by one. First of all, we took the orientation of the FR batch, so definitely I'm not going to revise that. Okay. Now, second, we discussed the non-current assets. Now, in non-current assets, I clearly started discussing that the non-current assets can be of two types: tangible, intangible, and one was financial, which we ignored completely for now. So basically, you can say non-current assets are of two types: tangible non-current assets and intangible non-current assets. Okay. Now, coming to tangible non-current assets, we discussed that again. Tangible non-current assets are of two types, that is property, plant and equipment, and investment property. Right? Can anyone tell me what is the basic level of difference between property, plant and equipment, and investment property? Anyone? Come on, guys, tell me. Physical substance. Okay. I'm not asking about tangible and intangible. I'm asking about property, plant, equipment, and investment property. What is the basic level of difference? Rental income, is it the only difference, Diksha? So rental income is coming in the property, plant, equipment as well. Property is rented to other parties, IP only. Very good, Akansha. Very good. Okay, so if there is a property, that is land, building, or both, which is held for rental or for capital appreciation, is called as investment property, and rest all properties, plants, and equipments are called as PPE, to be covered in the scope of IAS 16. To be covered in the scope of IAS 16. So if you tell me the definition of property, plant, equipment, it will be property, plant, equipment are tangible assets held for use in the production or supply of goods or services. Okay, admin works, and you can say third one is rental to others. Okay, the life of which is more than 12 months. The life of which is more than 12 months. Now, coming to the definition of investment property is land, building, or both held for rental to others or for capital appreciation. Okay, that's the meaning of investment property. I believe the meaning of property, plant, equipment, and investment property is very much clear to all of you. Now, moving ahead, we started IAS 16, International Accounting Standard 16 discussion. Okay. Now, before I start this discussion, I want to help you guys with understanding of, if you can recall, in the last class, I was talking something on this line, or not here, orientation itself, IAS and IFRS. Now, I just want to discuss what is the difference or what is the meaning of IAS and IFRS. Understand? IAS was initially set up, okay, IAS, International Accounting Standards. But now what happened, the standard setting board found out that basically these standards were set up very earlier, okay, very like they say 30 years or 40 years back down the line. Okay, now, so what happens, they needs to be revised. Now what happens, when as and when they revise these standards, they come up with a IFRS. So they are in the same framework. But IFRS are the revised IAS versions. Okay, I believe you understand this meaning. Now, coming back to my topic. So I was discussing IAS 16, property, plant, and equipment. Now, so what happens in IAS 16? First of all, definitely we discussed the meaning of property, plant, and equipment, and that was very much clear to all of you, I believe. Now, coming to the next point, it is a recognition principle. Can anyone tell me what is the recognition principle of property, plant, and equipment? What is the recognition principle of property, plant, and equipment? Future economic benefits are probable, and cost can be measured reliably. Very good. Now, so this is the recognition principle. And now, what is the relevance of recognition principle? The relevance is a property, plant, and equipment can be recognized in the financial statements if and only if it meets the definition of being a property, plant, and equipment, plus it satisfies the recognition principle. If both the things are satisfied, it is then only asset can be recognized in the financial statements as property, plant, and equipment. Okay, so that's the relevance of property recognition principle. Okay, now further, third one is which you have to study is measurement principle. Now, as I discussed in the measurement principle, we have to discuss the initial measurement, the measurement on the date of purchase of the asset, and the subsequent measurement. Okay, now initially the asset has to be measured at its cost, and subsequently the asset can be measured at cost model or revaluation model, which we have not discussed so far. Now, we were discussing in the previous class what is the meaning of cost. So in the meaning of cost, I discussed cost basically means purchase price minus any trade discounts or rebates, plus any non-refundable taxes, plus any directly attributable cost incurred to bring the asset in the location or condition intended by the management. Okay, now I also tried to give some examples of this directly attributable cost, and I told that these are the costs which needs to be included, and these are the costs which cannot be included in these directly attributable costs, right? So the example can be, you can say, installation charges, handling charges, all those things will be included, right? The examples of the expenses which will not be included basically included advertisement costs, right? Sorry. So and other costs also were there. So basically, these are the point of these are the costs which has to be included, and these are the costs which should not be included in the directly attributable costs. Now, Nishan has a query: why following cost is not cost of opening a new facility and cost of introducing a new product or a service? Very good. I'll definitely take up these queries. But before that, now tell me, guys, any of you have any queries? So I will take up all the queries at one go, and then we'll start the new discussions. Come on, guys, tell me. Any queries? Anyone? What is the difference between historic cost and current cost? Okay, very good. Though I will discuss this part, historic cost and current cost, in the framework, not now. Okay, but I will give you a brief introduction about it. Don't worry at all, because see, in my lecture of property, plant and equipment, I have never discussed about the term current cost. Okay, but I have to discuss, so that's why I will give you a brief introduction about it. Okay, no worries at all. Any other queries? Anyone? We already did that now, Lakshmi man. Restoration and removal cost. Okay, fine. Fine. So let us discuss why the following cost is not included: cost of opening. Understand. So basically, Harsita, I believe you asked this query in the last class also. I'll definitely take it up. Don't worry at all. Okay, now, as I told that all these things I will take up in the today's class. So I have not yet discussed about this. So I will be taking up in the today's class itself. Don't worry at all about it. Now, cost of opening a new facility. Let's suppose, understand, Vishal. What happens? This was already a studio setup done by me. Okay. Now, what happens? I want to make a new studio setup now. Okay, now what happens is this is studio setup, and there I purchased here a system laptop. I purchased a laptop here, right? Now I purchased a laptop here. Now, definitely when I purchase a laptop, all the expenses incurred to bring the laptop in this condition is capitalized. I discussed clearly that any directly attributable cost incurred to bring the asset in the location and condition intended by the management should be capitalized, right? So same thing is happening. This laptop any expenses incurred to bring it till here should be capitalized, right? But now if I am moving, now I'm making a new studio, okay, a new facility I'm opening, okay. Now when I'm moving this laptop from here to here, tell me, is this expenses incurred to bring the asset in the condition intended? Initially, no. Subsequently, we can transfer at any given point of time for any number of times, right? That doesn't matter. That doesn't matter. Okay. So what happens here is it says that whenever you are opening any new facility, you can definitely capitalize that facility as a whole. You can definitely capitalize the cost of opening that new facility as a whole, as a facility itself. Okay, if it satisfies the recognition principle, but you cannot capitalize the cost of opening a new facility to this asset. To this asset, you cannot capitalize to this asset. Okay, that's what it is trying to mention. Okay, Nissan, does this clear your query? Okay, now point number 2 was cost of introducing a new product or a service. Okay, similar type of example, cost of introducing a new product. Okay, we can understand this term via 2 examples. Okay, let's suppose ITC, okay, has a factory where it manufactures biscuits. Okay, now ITC is planning to launch a new product in the market. You can say Sunfeast. Okay, ITC is planning to launch a new product in the market, Sunfeast. Now, to launch this product in the market, it incurs a cost of, let's suppose, $2 million. Now, tell me, this 2 million, now will ITC capitalize this 2 million with the factory costs? Will ITC capitalize this 2 million with the factory costs? Will ITC capitalize this 2 million with the factory costs? No. Reason why? Because this $2 million, first of all, does not now, can you think of it like an advertisement expense? The another way of looking at things, right? Exactly, yes. It's like an advertisement and a promotion expenses. Definitely, it can bring us future economic benefits, but it is not probable. And hence we cannot capitalize these costs. Okay, is it clear? Okay, now moving on to the third query. Okay, now what was the third query? Just give me a minute. Difference between historic cost and current cost. Okay. Current cost is also called as, then another name for current cost is replacement cost. Now, I will explain this with the help of an example. Let's suppose this is an asset having a life of 5 years. 1, 2, 3, 4, 5. You purchase this asset for $100 here. Okay. You purchase this asset for $100 here. The life is 5 years. Can you please tell me what will be the carrying amount of the asset here? What will be the carrying amount of the asset here? 60. Very good. Now this 60 is historic cost. This 60 is historic cost. Okay. Now on the same day, on the very same day, what happens? You have to calculate the current cost also. So how will you calculate the current cost? How will you calculate the current cost? Now, for calculating the current cost, you have to first estimate current market price. Let's suppose the current market price is dollar 120. Okay, dollar 120. But now tell me, you have to calculate the current cost, and now current market price is for a new product, but this product is already used for 2 years, right? So what you will do now in that case, the current cost will be equals to the current cost will be equals to, it will say that this 120 is for a new product, but my asset, the current condition of my asset is used for 2 years, right? So I will say 120 is for 5 years multiplied by already used for 2 years. So it is called as 120 minus 120 by 5 into 2 is 240 by 5 is minus 48 is equals to 72. This 72 is your current cost. This 72 is your current cost, or called as replacement cost. Is it clear? Whoever asked me this query, is it clear? The meaning? 60 is historic cost. The original cost, the cost at which we purchased the asset. Okay. The depreciated original cost is called as historic cost. The depreciated original cost is called as historic cost. Clear, Riddhi? This was a query of yes. I believe it is clear to you. Depreciate the current market price. Yes. Okay, no worries. Let me explain again. See, understand. Forget. Don't look into the notebook. Let's discuss. Let's discuss. Okay, now understand. Historic cost basically means, let's suppose the price at which we purchased the asset originally, the price at which we purchased the asset originally, the depreciated value of that is called as historic cost. Is called as historic cost. The cost that we paid to acquire the asset. Now, what is the meaning of current cost? The cost that we have to pay, pay to acquire this asset, the asset at the same condition today. If we purchase the same asset at the same condition today, what is the price that we have to pay, right? But understand, definitely my asset is used for 2 years, so definitely in the market I cannot get the asset used for 2 years. So what will I do? I will say, okay, what is the value of the new asset? The value of the new asset is 120, but my asset is already used for 2 years, so I will depreciate it for 2 years. So the value that comes up is called as current cost. Is it clear, Akansha? Is it clear, Akansha? See, understand, theoretically, current cost is also termed as fair value. Okay. But understand, when I will discuss with you IFRS 13, there the meaning of fair value is quite different. Okay. It says the meaning of fair value as per IFRS 13, will say the price that we are supposed to receive to discard this asset, to sell this asset. Okay. Now here what I said here for meaning of current asset, for meaning of current value, what I said, the price that I have to pay to acquire this asset now. Okay. So if you talk about logically and practically, current cost and fair value are different. Okay. But for solving the questions point of view, they can be interchanged. From a questions point of view, if current cost is given, we can consider that as a fair value. But if you talk logically, if you talk practically, no, current cost and fair value are different. Is it clear? How exactly? I will tell you now. See here. Think it like this. Okay, laptop. You have a laptop. Now, what is the meaning? What is it? It's called depreciated purchase price. This is called as historic cost. Now, price paid to acquire acquire the asset at same condition. This is called as current cost. Now, price received to sell an asset, or that is exit price, is called as, this is called as fair value as per IFRS 13. Now, the difference is, if you understand here, it is price paid to sell an asset. The price that the asset that you have, if you sell it now, what is the price that you get? It's called as a fair value. Okay. To acquire, if you acquire a similar asset now, what is the value? Okay, that is called as current cost. Depreciated purchase price is called as the historic cost. I believe now this will definitely clear all your queries, all for all of you. Now, for questions perspective, if even if the current value is given, I will write here also. Note. From an exam point of view, okay, current cost can be treated as fair value. Clear, everyone? Is it clear, everyone, now? Wonderful. Now, what's the next query? Summarize, already I've done the summarization. Removal cost or restoration cost, I will discuss now. Okay, fine. Then Rhythm is saying good morning, Rhythm. Okay, two queries pending, I believe. Okay, let me take one by one. So this was point number 3, now point number 4. Restoration. Okay. I'm taking the example, same example for oil rig, but what I'm doing here is earlier in the last class, that is that is yesterday, I told that the life of oil rigs is 20 years. Okay, so calculating the present value for 20 years will be quite difficult. Okay, for you and for me. Now, what I'll do is for the ease of calculation, I will make the life as 5 years. Okay, so that I'll show you the overall calculation for the 5 years. Okay, now, what happens here is, if you will read the meaning of decommissioning or restoration or removal cost, if you read it from the standards directly, it will say as the initial estimate, the initial estimate. Okay, now, so what is the meaning of it? Okay, now understand. Tell me, guys, I am explaining what is not there in the syllabus. Okay, so please listen to me very carefully. I'm giving an extra effort here. Okay, now please listen to me carefully here. Okay, now this will not be tested in the exam. This explanation will not be tested in the exam, but yes, it will definitely help you in solving the questions in the exam. Okay, so please listen to this discussion very carefully. Okay, I will not be going to repeat this time again. Okay, now understand. So now this is an oil rig. The life is 5 years. The life is 5 years. The life is 5 years of this oil rig. Okay. Now the entity has spent an amount of dollar 2 million on 2 million on, or not 2 million, dollar 200,000. Okay. Dollar 200,000 is spent on purchase of oil rig, Now what happens here is, and the entity that basically Reliance Industries has an obligation to restore that area of seabed once it removes the oil rig from that place. And the Reliance estimates the cost to restore the place will be substantial amount, and it is only if Reliance commits to restoration, the government will allow to install that oil rig in the sea bed. Okay, otherwise the government will not allow. So it is because of this decommissioning or restoration or removal liabilities, it is because of these costs the oil rig can be installed, and since oil rig can be installed, it is then only then the future economic benefits will flow. So it means that decommissioning or restoration or removal costs indirectly helps the oil rig in generating the future economic benefits, and hence they should be capitalized with the cost of the asset. This is the first point. But now we concluded here that it should be capitalized with the cost of the asset, but the question comes up at what amount? Because these amount will be incurred at the end of 5th year, and we don't know what is the actual amount. That will be spent after 5 years. We don't know what is the actual amount that will be spent after 5 years. So what should be done for that? So for that the standard mentions here is, you estimate the amount here itself. Estimate if the decommissioning or the restoration has to be done today. Estimate restoration costs today, that is on date of purchase. Generally, this discussion happens in the case of, you can say, SBR students, not for FR. But let me explain this point. Okay. Now, that is on the date of purchase. Now, considering today's scenario, Now tell me, let's suppose this estimate comes to dollar 20,000. This estimate comes to dollar 25,000. Okay, dollar 25,000. Now tell me, at the end of 5 years, will the same amount be inputted? Will the same amount be incurred? At the end of 5th year, will 25,000 be incurred or something else? No, because every year there will be a inflation. Right? So what happens? We have to send this 25,000 to here, considering the inflation rate in the country. So what we have to do? We have to adjust for inflation. Now tell me, what is the inflation rate? Let's suppose the inflation rate in the country is, 5% per annum is the inflation rate in the country. Let's suppose 5% per annum is the inflation rate in the country. So can you please send it here? So what is the amount? Tell me. What is the amount? 25,000 into 1.05 into 1.05 into 1.05 into 1.05. 25,000 into 1.05 at the end of 1st year, 2nd year, 3rd year, 4th year, and 5th year. It is 31907. The amount comes to 31907. Right? Very good. Now tell me, this is the estimated amount. But now always think logically. Let's suppose we are making a plan to go for Goa, okay, with our friends. Now, understand us first. Let's first understand what I'm trying to explain, and then at the end we'll discuss all the queries. Okay, now let's suppose I'm making a plan to go to Goa with my friends. Okay, and I estimated that, okay, an overall amount of 25,000 per head will be incurred. Okay, now when I estimate an amount of 25,000 will be incurred per head, so what I do is, let's keep a buffer of 5,000. Let's keep a buffer of 5,000 further, right? Let's keep a buffer of 5,000 further, right? We do these things, right? Now same thing I'll do here also. What I'll do is, considering that some other cost might be incurred which I cannot estimate now, I will include a risk premium. I will include a risk premium. Okay, now let's suppose the risk premium amount is 2,000. Okay, now what is total amount comes to? 31907 plus 2,000 comes to 33907, or let's suppose 34,000, around 34,000. Okay, let's suppose 34,000. Okay, now how to calculate this? 25,000 multiplied by 1.05 multiplied by 1.05 multiplied by 1.05 multiplied by 1.05 multiplied by 1.05, right? So this is the amount incurred at amount estimated at the beginning of the at the date of purchase. This is the amount at the end of first year. This is the amount at the end of second year. This is the amount at the end of third year, at the end of fourth year, at the end of fifth year. This is the amount. So we have, what we have done, we have increased the amount considering the inflation rate in the country, considering the inflation rate in the country. Is it clear, everyone? Is it clear, everyone? Riddhi, Harsh, Riddhi and Harsh, is it clear, everyone? Is it clear to you guys? Very good. Now, so considering that we arrive at 31907 and risk premium is 2,000. Now what we'll see is, what is the discount rate of the Reliance? Okay, what is the discount rate of Reliance? Now, accordingly, we will say that this is the amount that will be spent at the end of fifth year. That's an estimate. Now, what we have to do, we have to calculate the present value of this. We have to calculate the present value at the rate of, let's suppose, 10%. 10% is how? 10% is the discount rate of that entity. Discount rate of that entity. Okay, now, so what will the amount? The present value will be equals to what? So present value will be, I believe all of you know to calculate the present value. I believe all of you already know how to calculate the present value. Guys, anyone who doesn't know how to calculate present value? Anyone who doesn't know? If you know, fine, but if you don't know, please let me know now. Okay, fine, no worries. So what is the discount rate? 10%, right? So what you have to do is, in your calculator, first calculate the discount factor. How to calculate the discount factor? Understand. First calculate the discount factor. Guys, these things are the basic which I will not be repeating time and again. So please listen to me carefully here. Okay, discount factor. So how to calculate discount factor is 1 plus rate by 100. So now tell me, what is the rate? 10. So it is 1 plus 10 by 100. So it is equals to how much? Tell me. It is equals to how much? 1.10 by 100 is 1.10. Or I write it like this. 1 plus 0.10 is equals to 1.10. Okay, 1.10 is the discount factor. Now in your calculator, what you have to do is write 1.1, then divided 2 times. Okay, divided 2 times. Okay, now so divided and then equals to 1.1 divided equals to. Okay, now you have to press this equals to for the n number of times, Now what is the meaning of n? What is the meaning of n? N is years. For how many years you want to discount? 5 years, press it for 5 years. 2, 3, 4, 5, right? So what is the value? 0.6209, right? Now this is the value that comes up is your you can say present value factor. The value that comes up is called as present value factor. Is called as present value factor, right? So what is the value? 0.6209, right? So it is 34000 multiplied by 0.6209 is equals to how much? 21111. Yes, it's fine. No change in value. Fine. That's totally fine. That's the, you can say, calculator trick, you can say, okay? So this is the present value. Now how to calculate, how to account for it? This is the calculation of the decommissioning cost. Now how to account for it? So the accounting, understand the accounting treatment, okay? On the date of purchase, on the date of purchase, what we will do here is, we will write here oil rig account a debit to bank to provision for decommissioning costs. That is, now bank is how much? We paid 200,000 and decommissioning cost is 21,111. So it is 221,111. So this is the entry on date of purchase. This is the entry on date of purchase. Now, at every reporting date on each reporting date, what you will do? You will pass two entries. You will pass two entries. Now, what are the two entries that you have to pass? Depreciation expense account debit to oil rigs, okay, and finance costs account debit to provision for decommissioning costs. So at year end 1, year end 2, year end 3, year end 4, and year end 5, right? So what is the amount depreciation? So 221,111 divided by 5 is 44,222. 44,222, 44,222, 44,222, 44,222, 44,222. Right now, for this one, what happens here? Decommissioning cost is 21111 multiplied by 0.1 is 2111. Right now, so decommissioning cost becomes how much? It was 211 is 23,222. Okay, now again 10% of it is 2322. So it becomes how much? It becomes 25,544. Now again 10% of it is 2554. So 10, it becomes how much? Into 1.1 is 28098. 28099. Okay, now it is 2810. So it becomes how much? Into 1.1 is 30,909. Okay, now here it is. Okay, 3091, and it becomes 34,000 at the end of 5th year. It becomes 34,000. Now what will happen at year end 5? At year end 5. Now what will happen at year end 5? I have to incur the costs. At year end 5, I have to incur this cost. So what will I do is I will write here provision for decommissioning costs account debit. How much? 34,000. Now tell me, will I incur exact 34,000? Will I incur exact 34,000 at the end of year 5 when I'm incurring the expense? Will I incur exact 34,000? No, because that was an estimate. Estimates might change, right? So what will happen? I will say that, let's suppose I incurred to bank, I incurred an amount of 40,000. So what will happen? I will transfer the rest P&L account debit 6,000. That's all. Simple. So this is how the decommissioning cost has to be accounted for. I believe you have understood the concept. So let me know if there is any query, any of you. Come on, guys, tell me if there is any query. Do let me know. Or this is clear. Is this clear? The decommissioning cost is clear, everyone. Exactly, it comes, Monica. It comes. Hamad, tell me, where do I need to explain the entries? This entry, as I told in the previous class itself, the provision for decommissioning cost is an enabler asset. Hence, we need to capitalize the cost. So, hence, we just capitalize the cost. Right now understand. Since this oil rig is valued at 221,111, we have to depreciate over 5 years. So that's what we have done here. We just depreciated the oil rigs over 5 years. Right now, since we have calculated for the present, this provision for decommissioning cost is the present value, we have to unwind also. So now what we are doing, we are just unwinding at the rate of, say, the same rate which we use to calculate the present value. Right, so that at the end of year 5, the value again reaches to 34,000, and we'll pay it off and settle it off. Please try to read the entries. Please try to read the entries. This 44,222 is calculated how? 221,111 divided by 5. Basically, it is this way. Depreciation per year is this by useful life. Okay, depreciation per year is equals to 221,111 divided by 5 years is equals to 44,222. Is it clear, Harshita? Is it clear, Harshita? Wonderful. So that's the fourth query, and the one query is remaining. Incidental operations. Incidental operations. Now this was a query again. So what happens? Let's suppose DLF, okay, is planning to construct a mall in Gurgaon. Now, so what happens? This mall is getting constructed, but the construction of the mall takes time. Okay, now what happens when the mall was halfway under construction? Okay, and the construction was being done. The DLF thought, why not? Till the time the construction is being done, why not utilize this place for car parkings? So what he did is it just made arrangements for the car parking. Okay, now. So in this mall, to make the arrangements for the car parking, it incurred a cost of, let's suppose, $10,000. Okay, and it started generating a revenue. Of $3,000, not 3,000, around 6,000 per year. Okay, when the mall was halfway under construction. Okay, now tell me, what was the intent of DLF? To construct a car parking or to construct a mall? What was the intent of DLF? Tell me. What was the intent of DLF? Mall or car parking? Mall, right? So it says that the intent of DLF was to make the mall and not the car parking, to construct a mall and not the car parking, right? this construction of car parking is not directly related or not directly related to the construction of the mall. So what happens, standard says that IAS 16 says that whatever costs or revenue comes from incidental operations which is not a part of the actual plan, should be recognized in P and L, whether it is a cost or it is a revenue, both should be recognized in P and L, Is it clear, everyone? Now, someone asked this query, so I've explained this point. Okay, now, so this is all about the query from the previous classes. Now, can anyone tell me what was the point number I was using in the last class? What was the point number I was using in the previous class? So what I will do is I will change the numbering system, otherwise you will get confused. Point number 6. So I was discussing the initial cost. Okay, now I will start from here. Measurement principle. Now, in the measurement principle, as I was discussing, that we have to study initial measurement, and subsequent measurement. Now, initial measurement, also we have to discuss at 2 stages. Before I write, let me ask you a question. Let's suppose you purchased a laptop, okay, or anything, you purchased any device, okay, and you paid the amount, okay, to purchase that. Okay. Now, so what happens? Now life is 5 years. So don't you think you will incur any additional cost over the period of 5 years? Tell me, you will incur or not? Yes, will incur. That is also a cost that you are incurring, right? So don't you think there comes a question whether we should capitalize those costs or not? Right? There arises a question whether we should capitalize those costs or not. So that's a question now. Initial measurement means 2 things. Initial costs, that is on date of purchase, okay, that is on date of purchase, and further it also means subsequent costs, that is incurred during life of asset. Right? Now we have to assess. So definitely initial costs we will capitalize. Right? Definitely we will capitalize. We have already understood this. Okay, already discussed. Now my point of discussion is this one. My point of discussion is subsequent costs. Now subsequent costs can be of multiple types. Subsequent costs can be of multiple types. Now, one is repairs. and maintenance. Other is, you can say, replacements. Third one is inspection, or it is also called as overhauls. Overhauls. Now, tell me, my question here is, guys, if you have studied properly so far, okay, the last class and whatever I discussed today's class, if you have studied properly, definitely you will be able to answer yourself for these. Okay. Now tell me, whenever we incur the cost, whether initially or subsequently, okay, if it satisfies the definition of property, plant, and equipment, shall we recognize all the costs? Shall we recognize all the cost incurred as a property, plant, and equipment in the financial statements? Shall we recognize all the costs, or there is a filter? Or there is a filter? Tell me. And what is the filter? Hers? What is the filter? What is the filter named as? What is the filter named as? Future economic benefits and the cost. Assuming cost can be measured reliably for these. Assuming cost can be measured reliably for these. Now tell me, repairs and maintenance. Do you think they give any future future economic benefits? Do you think they give any additional future economic benefits? Now understand, Nissan, you cannot say no future economic benefits. Okay, very good, Gufran. There you have answered the perfect answer. Okay, you have given the perfect answer. Now understand. Let's suppose I have a building. Let's suppose I have a building or anything. Let's suppose I have a vehicle, a car. Okay, I have a car. Okay, now what happens? I give every 3 months. I give it for servicing. Every 3 months I give it for servicing. Okay, so what happens? Once I get the, let's suppose yesterday I gave my car for servicing. What happens now? I got the car today after servicing. What happens? It will be in the best performance, right? But now what will happen? What will happen during this 3 period? Okay, I will erase this diagram. So if you want to draw with me, you can do it, but I don't think so there is a requirement, but just understand. Okay, so what happens when I so let's suppose this is the day when I got my car serviced. So now it will be at the peak of its performance, right? So now as the 3 months starts approaching, the performance will start to decrease, right? But now again, when I give it for servicing, again it increases. Then again it decreases, again it increases, right? Again decreases. So what happens? This repairs at regular intervals just maintain the asset, and that's the reason why we are not required to capitalize this asset. They does not give any, see, extra cost should give extra benefits. They are not giving any extra benefit. They are just maintaining the asset, and hence we cannot capitalize the repairs and maintenance. Is that clear, everyone? Is that clear, everyone? Repairs and maintenance, since these costs just maintain the asset and doesn't give any additional future economic benefits, hence cannot be capitalized. Okay, so what is the treatment? Expense of in P&L. No, no, Hiral, I didn't say that. If that was the point, Hiral, then why will I classify these subsequent costs into 3 types and then discuss each and every type? I would have simply said no, all the subsequent costs should be transferred to P&L. Are you understanding, Hiral? Okay. Now, replacements. replacement. Understand what is the meaning of replacement. Basically what happens, a part of the asset, now let's suppose flight, okay, the flight basically has an overall life of 20 years, has an overall life of 20 years, okay, but the, you can say the engine of the flight, the engine of the flight has a life of 5 years, the engine of the flight has a life of 5 years, and every year, every 5 years it has to be replaced, every 5 years it has to be replaced. Now understand, so at the end of fifth year, don't you think I will de-recognize the old engine and recognize the new engine? I will de-recognize the old engine and recognize the new engine, right? So whenever you are replacing, what you have to do here is you have to de-recognize, de-recognized a replaced asset and recognized and recognize new component. Clear everyone? Come on guys, tell me, is it clear everyone? Now, inspection or overalls. Again, there are some assets which require inspection at regular intervals. Example again the flight. Example again the flight. Example again the flight. Okay, Subham, this can be called as component, but component is little bit different. I will explain the meaning also. I'll take up an example and explain it off. Okay, I will explain it. Don't worry at all. Now, inspection or overalls. Inspection or overalls. So basically, what happens in inspection? There are in the aviation industry, there is a strict rule as per the law that you have to get your aircraft inspected every 5 years interval. Okay, inspected at every 5 years or 3 years interval. Okay, as far as I'm aware, it is 5 years. It might be 3 years for different in aviation. Okay, different companies have different rules. Okay, for this. Okay, now, so what happens now? So they have to get it inspected. Now, tell me. Definitely, I will agree on this fact that this inspection or overalls is not increasing the future economic benefits of the asset. They are just maintaining it. Agree? They are just maintaining it. They are not increasing the economic benefits. They are just maintaining it. Agree? Right? But if the inspection is not done, I will not be able to operate the asset. Wonderful answer, yes. Wonderful answer, yes. Okay, if I will not inspect the aircraft, I will not be able to operate it off, right? As per the guidelines, for the law, I will not be able to operate, and hence they act as an enabler asset. Hence they act as an enabler asset, and hence we need to capitalize it off. Okay. Similarly, it's like when we capitalize the inspection cost, we amortize over 5 years, and again at the end of 5 years, again we have to capitalize it off. So it's the treatment is more or less like replacement itself. The treatment is more or less like replacement itself, and that's the reason why if you open your book, if you open a workbook, they have written replacement and overalls as a one topic itself. Okay, but what I do is I discuss it separately so that you understand the logic and the rationale behind each and everything. See, understand the logic behind replacement is different. The logic behind overalls is different. Though the treatment is same, but the logic behind each of them is different, and hence I want to explain it separately. I hope you have understood the logic. I will write here. They act as enabler assets. They act as enabler assets to be capitalized. To be capitalized. I hope that is clear to all of you. Okay, is there a legal obligation that you have to repair the asset? Now let's suppose I have a car. If I will, even if I will not get it serviced, can I, is there an obligation that I will, if I will not get it serviced, I cannot operate the asset? Tell me. No, right? But in aviation sector, there is a law, there is a rule that if you don't, get it inspected at regular intervals, you cannot operate it itself. Your license will be cancelled. Okay, that's the reason they act as an enabler asset. Okay. Now, so is measurement principle for initial measurement clear to all of you? Is it clear to all of you? Okay, now definitely I'll take up examples, but let me finish this point, or just hold on a minute. Let me just see if pollution and insurance of vehicles, again, see all those again are you can say enabler assets. Now even in the factories also, there are pollution control equipments installed, so they directly do not give any benefit, but they are enabler assets. Okay, so that needs to be capitalized. Okay, the examples can be a lot. Okay, so I'm not trying to cover each and every example, but yes, I've tried to cover the max I can. So the example can be n numbers. Okay, just let me see if we can do any good question on this one. Is about the revaluation itself. So the question comes from revaluation itself. Okay, fine. So let me discuss the subsequent measurement, and then after that I will discuss the questions. Okay, point number 7. Again, comes measurement principle. And as we discussed so far, the measurement principle are of two types: initial measurement, which we already discussed, which I'm not discussing it, which I'm not discussing now again. Already discussed. Now comes the next point is subsequent measurement. Now, what is the meaning of subsequent measurement? It says the asset can be measured subsequently at either cost model or revaluation model. Now, understand things one by one. Okay, first of all, point number 1. Choice of a model to be opted is at the discretion of the company. Is at the entity's discretion. Okay, the choice, like if they want to appear for a cost model or if they want to opt for a revaluation model, the choice is with the entity. Now, second, the choice is to be applied. The choice is to be applied on class of assets and not on individual assets. Now, what is the meaning of a class of assets? What is the meaning of class of assets? Let me explain that to you. every entity makes up a class of assets. Like this is my official building, this is my factory building, this is the plant and machinery, this is the office equipment, this is the, you can say, all other equipments. Let me write here, this is the class. Okay, building, plant and machinery. Okay, and then you can say furnitures. Then you can write here office equipments. Now, in building, there will be building number 1, building number 2, building number 3, building number 4. There will be multiple buildings. Okay. Now, plant and machinery. Okay. There will be plant and machinery number 1, plant and machinery number 2, plant and machinery number 3. Furniture. Okay. There you can say chair, table. Okay. Then you can say again furniture number 2, furniture number 1, furniture number 2. Okay. Now, then comes office equipments. Office equipments, you can write here again AC. Then you can write here fans. Then you can write here lightings. Then you can write here office equipment number 1 or 2 or something of like that. Okay. Now, let's suppose these are the class of assets. So let me just bifurcate it off. Now what happens here is they are the class of assets. Now for these class of assets, what we have to understand here is just give me a minute. Now, first of all, the choice whether I have to go for a cost model or a revaluation model has to be done class by class. Meaning thereby entity can say that for building, I will opt for a revaluation model. For building, I will opt for a revaluation model. And for all others, I will opt for cost model. And for all others, I will opt for cost model. Now, what is the meaning of it? If at all entity wants that, okay, for this AC, I want to appear for a revaluation model. Tell me, can entity do that? Can entity do that? No, no. The choice of opting for cost model or a revaluation model cannot happen asset by asset basis. Rather, it happens on a class of asset by basis. Okay. Rather, it happens on a class by asset basis. Okay. Now, whether it can opt for plant and machinery valuation model, yes, it can do that. It can do that. But the choice has to be done on a class by class basis. Now, entity wants to do this revaluation. Okay, fine, you can do that. But if it is revaluation and wants to this to cost, no, this is not allowed. No, this is not allowed. You have to opt for the entire class. The revaluation, the model should be the same. For the entire class, the model should be the same. Okay, is it clear, everyone? Now, point number 3. Point number 3. Okay. Frequency of revaluation. How soon shall we revalue the asset? Shall we revalue every year? Or shall we revalue once in 2 years? Or shall we revalue only once in the life of the asset? So standard says you have to generally, it's not the rule. Generally, you have to revalue once in 2 to 3 years. Once in 2 to 3 years. But if, however, understand, however, if the fair value of the asset is highly volatile, what is the meaning of volatile? Highly volatile, changes every year. Okay, then revaluation can be done every year. Okay, now can you please write it off? If you have not done so far, please write it off. It is then only I will discuss further. These points, please write off, all of you. Guys, when I'm explaining, please don't write. I will give you sufficient time to write everything, but when I'm explaining, don't write. Is it clear? Done? Writing clear? Do let me know once you have done the writing part. Sumedha, done. So I'm done. So done. Everyone done now. So this is the frequency for revaluation. Now, fourth point is treatment of revaluation gain or loss. Okay, now understand. Quite easy topic this one, but understand it. Okay. You did the revaluation for the very first time. You did the revaluation for the very first time for an asset, and there are chances that it can be a revaluation gain or it can be a revaluation loss. There are chances, right? Now, if it is a revaluation gain, it will be transferred where? Tell me, it will be recognized where? If it is a revaluation gain, it will be recognized where? It will be recognized in a revaluation surplus. It will be recognized in revaluation surplus, which is first recognized in other comprehensive income and then becomes a part of equity. Okay. If it is a revaluation gain, I will record here. Now, if it is for a revaluation loss, then where will I record it? Tell me, where will I record in the revaluation? If it is a revaluation loss, then I will record directly in P and L. But always remember this in mind: revaluation gain or revaluation loss does not belong to P and L. They belong to revaluation reserve. Now, sir, I have transferred this to P and L. Okay, fine. Even if you have transferred to P and L, it's like a loan that you have taken from P and L. It's like a loan that you have taken from the P and L. Okay. Now you have to repay this loan back to the P and L. You have to repay this loan back to P and L when the time comes up. Okay. Now, how exactly? We'll discuss it off. Now, will we revalue only once in the lifetime? No, right? Yes, you are saying that we have to adjust with reserve. Reserve is not there. No, we are revaluing for the first time and it is a loss. Reserve is not existing only. We are revaluing for the first time and this is loss. So there is no reserve. So you might say that there is a reserve for another assets. We cannot do that. Revaluation loss for one asset can be adjusted with the revaluation gain of the same asset, not the other assets. Okay. Now, subsequently, if I revalue, subsequent revaluation. If I revalue subsequently, then again there are chances that I might get revaluation gain, or I might get revaluation loss, right? OCI means other comprehensive income, other comprehensive income. Now, what is the meaning of OCI? Let me just quickly tell you. Basically, what happens in the P&L, there are two components, P&L and OCI. P&L, we record the gain and losses. In OCI, we record the gains or losses which we don't want to record in the P&L, but we want to disclose to the investors. Okay, we don't want to record in P&L, we don't want to record the gain in the P&L, but we want to disclose to the investors, and that those gains or losses we record in other comprehensive income. Basically, these are the gains or losses which we are not going to realize soon, Okay, no, it is not like indirect income. Indirect income is something different. Okay, this is something different. OCI basically means a notional gain or loss, which I have not realized so far, and I am estimating that I will not realize it in the near future. I will not realize it also in the near future. Those gains or losses are recognized in other comprehensive income. If there is a gain or losses which I have already realized, will be transferred to P&L, which I have not realized so far, but I estimate that, okay, I will realize in the near future, will be realized in the P&L. Okay, but if there is a notional gain or loss which I have not realized so far, which I estimate that I will not be realizing also in the near future, I have to recognize in other comprehensive income. Like, for example, revaluation surplus. I have not realized so far, and I estimate that over the life of the asset, I will not realize it also, right? And hence, that's the reason why we have to recognize in other comprehensive income. Clear? Yes? Yes, and Hasita, is it clear? Now, so subsequently, first time when we get revaluation gain, and subsequently when we are doing, we get again revaluation gain. So what will we do? We will again recognize in revaluation surplus. We'll again recognize in revaluation surplus. But now, if subsequently I have a revaluation loss, so what will I do? I will adjust with revaluation surplus. But if there is any excess loss, then any excess loss is recognized in P&L. But basically, what I'm trying to say is, let's suppose there's a revaluation surplus of $50. Okay, and this time I had a loss of $40. So what will I do? I will adjust 40 with 50, and the revaluation reserve will be net of 10. Net revaluation reserve will be disclosed at 10. But now let's suppose I have a revaluation loss of 75. Then definitely to the extent of 50, I can adjust with revaluation reserve. But where will the rest 25 go? It will go to the P&L. Okay, now revaluation loss is there. Just okay. Revaluation loss, and now again subsequent revaluation. Okay, now I get a revaluation gain again, or I might get revaluation loss. So let's discuss easy part first. If I get first time when I did revaluation, I got loss. Second time when I did revaluation, again I got loss. So definitely, what will I do? I will transfer again to But now, first time when I did revaluation, it was transferred, I got revaluation loss and I recognized in P&L. But when subsequently I did revaluation, I got revaluation gain. So what will I do first? Tell me now. Exactly. First, I will repay my loan back to P&L. Okay. Recognize revaluation gain in SPL to the extent revaluation loss was recognized in P&L. Now, any further or any excess will be recognized in a revaluation reserve or revaluation surplus. Now, please have a look at this chart and tell me is it clear or not, and draw it off. Draw this chart also in your notebook. Done? Wonderful. Wonderful. What about others? So, done. So this is the treatment of revaluation gain or loss. Now, point number 5. As we discussed that whenever we do a revaluation, we transfer the revaluation gain or the loss to revaluation reserve. Now, what we do with this revaluation reserve? What is the treatment of this revaluation reserve? What is the treatment of a revaluation reserve or revaluation surplus? Or revaluation surplus. What is the treatment of this reserve or surplus? What is the treatment of this revaluation reserve or surplus? The standard says that you have to transfer this revaluation reserve or revaluation surplus. You have to transfer this revaluation reserve or revaluation surplus to retained earnings. Harshita, just give me 5 minutes. Uma, Harshita, all of you, I will take up all your queries, but first let me complete this one. With this, my discussion will be over and I will be ready to take up all your queries and the questions. Okay, now. So, revaluation reserve will be transferred to retained earnings. But now, there are two approaches to transfer. There are two approaches to transfer and both are allowed. Option number 1. And option number 2. Option number 1 is transfer. Please write it along with me and then I'll explain. Transfer revaluation reserve to retained earnings at the time of. Please write along with me. At the time of disposal of asset. Option number 2. Transfer revaluation reserve to retained earnings over remaining useful life of asset. Please write it and then I will explain it off. Let me know once you're done writing. Done. Now understand. Let me give you an example. Let's suppose this is an asset which you have purchased for $100. The life is 5 years. 1, 2, 3, 4, 5. Now, what is the carrying amount here? Tell me. What is the carrying amount here? 60. Now, let's suppose the fair value here is, let's suppose, 90. So, what is the revaluation reserve? What is the revaluation reserve? Tell me. 30. Very good. Now comes the question. How will this revaluation reserve be treated off further? So, standard says that option number 1, you can transfer this revaluation reserve to retained earnings here. 30. Okay. Or option number 2, you transfer 30 over 3 years. That is 10, retained earnings 10, retained earnings 10. This is what I am trying to say. This is what I am trying to say. This is what I am trying to say. Okay. Now the challenge, where the challenge comes up, please listen to me carefully. If the question, student will not make, you guys will not make a mistake when the question says that the entity opt for this one. I can guarantee that you will make a mistake. You will make a mistake if not studied carefully under this method. Under this method, I can prove it right now. Let's write a question and all of you have to solve it off. Okay. Let's discuss. Yes, you will get to know everything. Let's discuss this example. That's the question. You have 5 minutes time. Please solve it off. All of you understood the question? All of you understood the question, guys? Yes, please solve it out. Okay, just one more line item I'll write here. So the treatment in two cases, okay? Case one, case two. Revaluation reserve is transferred to retained earnings at the time of disposal. It's 350, not 250. The fair value at the end is to 350, not 250. Case one, revaluation reserve to retained earnings 350, 350. Case one, no, not a correct, not even one correct answer so far. Not even one correct answer so far. Amount might be correct, I'm not assessing that, but the entries are not correct. The entries are not correct. Revaluation reserve to retained, no, not the entries, again, not correct. You guys have not understood the concept itself, it seems. I am asking the treatment for revaluation gain or loss. You are giving the treatment of revaluation reserve. Wrong. Give me the journal entries for revaluation gain or loss. Treatment of revaluation gain or loss. See the question properly. That's a challenge. We don't read the question itself. Amount. Okay, let me make it more clear. The question at year end 3. I just need the entry for this year end 3. Tell me the general entry under both the cases for year end 3, how the revaluation gain or loss will be treated. Revaluation surplus to OCI. I really don't understand what you guys are giving the general entries. Fine, let us discuss. Don't worry. Case 1. Solution, case 1. Need not worry at all, guys. Let us discuss this question. With this question, I believe things will become pretty much clear to all of you, okay? The life was 5 years. 1, 2, 3, 4, 5. Now, the cost of the asset was $1,000. Now, first revaluation was done at the end of year 2. So, at the end of year 2, what was the carrying amount? Now, answer what I'm asking. At the end of second year, what is the carrying amount? 600. Very good. What is the fair value? 900. So, what is the revaluation gain or loss? is 300 will be transferred to revaluation reserve. So what is general entry here? General entry is asset account debit to a revaluation reserve 300. No one gave me this entry. Okay. Now this is year end 2. Now I am asking about year end 3. Now year end 3, tell me what is the balance or what is the carrying amount of the asset? What is the carrying amount of the asset at year end 3? 900 becomes the revised carrying amount. Revised carrying amount is 900. The life is how many? 3 years. The life is 3 years. So 900 needs to be depreciated over 3 years. So what is the carrying amount here? 600. What is the fair value here? 350. So what is the revaluation gain or loss? What is the revaluation gain or loss? So it is revaluation loss of how much? 250. Right? Now how much I have revaluation reserve? 300. Revaluation reserve has a balance of 300. Right? Revaluation reserve has a balance of 300. Right? So and I have a revaluation loss of how much? 250. So what is journal entry here? So I will adjust this revaluation loss with the revaluation reserve. So the journal entry will be revaluation reserve account debit to asset. I will reduce the value of the asset and adjust it with the revaluation reserve. How much? 250. Now tell me, is this clear, everyone? Is this entry clear, everyone? So I have to increase or decrease the value of the asset. The corresponding amount might go to revaluation reserve or to P&L. Okay. Now case number 2. Case number 2. Again, let's draw the same diagram. Now, what is the carrying amount here? 600. What is the fair value here? 900. What is the revaluation gain here? 300. So the journal entry for this will be asset account debit to revaluation reserve or revaluation surplus. How much? 300. Now revaluation surplus has to be transferred to retained earnings over the life of the asset. So here it will be 300 divided by 3, 100 will be transferred to retained earnings. So here the balance of revaluation surplus will be equals to 200. Now what is the carrying amount of the asset? The carrying amount of the asset will be how much? 600 again. Now what is the fair value? The fair value is 350. So what is the revaluation loss? Is 250. Right? Now this revaluation loss is 250, but the revaluation reserve is how much? Only 200. So what should be the journal entry? The journal entry will be like this. The journal entry will be to asset. I have to reduce the value of the asset by how much? 250, out of which I can adjust with revaluation reserve how much? 200. The difference will be transferred where? P and L. How much? 50. So this one entries. This is the set of entries that I was asking for. How it is a revaluation loss? Carrying amount is 600. The asset has a value of 600 and its fair value is 350. Don't you think it's a loss? The asset fair value is only 350, but the carrying amount is 600. So don't you think it's a loss? Hers? $600 कहाँ से आया? Okay, understand. Now tell me. Understand this chart. Okay, your asset was how much? 1000. Let me explain again. From where that carrying amount 600 came, I will explain it again. No worries. 5 years. 1, 2, 3, 4, 5. Asset was a value of 1000. So it's 5 years. So it should be depreciated as 200, 200, 200, 200, 200. Now here the carrying amount is how much? 1000 minus 400 is carrying amount becomes how much? 600. Now here I say my fair value is 900, right? So my what happens? The revaluation gain or loss is 300. So now what is the meaning of revaluation gain or loss? What is the entry that I pass? The entry that I pass is asset account debit to revaluation reserve. Means I am increasing the value of the asset by $300. So what was my actual value of asset? 600. I increased it by 300. So 600 plus 300 is 900. So on this date, what happens? My revised carrying amount on this date is equals to 900. Now 900 and the life is how many? 3 years. The life is 3 years. So don't you think my depreciation will be depreciation per year? Depreciation per year will be 900 divided by 3 is equals to 300. So it will not be 200 anymore. It will not be 200. It will not be 200. It will be 300 rather. Rather it will be 300. Rather it will be 300. Now 900 is the value. 900 is the value, right? Now 900 minus 300 is 600 is the carrying amount. 900 is a revised carrying amount and 300 is a depreciation. So it is 600. Clear? Clear? Or other ways, I purchased the asset originally at 1000. I depreciated 400, but I increased the value of the asset again by 300, and then I depreciated the asset by 300. So this gives you 600. I purchased the asset for 1000, depreciated for 400, then increase the value of the asset by 300 and then depreciated by 300. This gives you 600. Rather than doing this much lengthy calculation, you can just say your revised carrying amount is 900 minus 300 is depreciation. It will give you 600. Right now, since the carrying amount is 600 and the fair value is 350, your revaluation loss is 250. Clear, everyone? Is it clear? Harsita, Hers, yes. Riddhi? Anyone having any queries in this one? Guys, please don't hesitate. If you are having queries, please discuss that with me. Wonderful now. Very wonderful. Okay, so that's what is the meaning of treatment of revaluation reserve. Basically, revaluation reserve can be transferred, is transferred to retained earnings, but can be transferred either at the time of disposal or over the life of the asset. Now, what we have to be careful is if it is transferred over the life of the asset, the balance of the revaluation reserve will get decreased accordingly, right? So we have, when we are transferring the revaluation loss, when we are transferring the revaluation loss to revaluation surplus, when we're transferring the revaluation loss to revaluation surplus, be careful about what is the balance of revaluation reserve. Why we have not shown transfer to retained earning entries? We have not shown because it was, I have not asked that in the question. What is that? What I asked in the question? So the treatment of revaluation gain or loss. Did I ask? So the treatment of revaluation reserve? No, that's why I have not shown it off. Okay, but see, I have just discussed here that out of 300, 100 is transferred to retained earnings and the balance of revaluation surplus is only 200. Is it clear, Sneha? Is it clear, Sneha? Okay, now let us take up one question. Let us take up one question from our material so that it will give you much more clear understanding. Okay, just give me a minute, please. Case 2, second part, journal, please explain. Okay, fine. Now understand again. So what happens in case number 2, basically the what was the case 2, that the entity transfers the revaluation reserve to retained earnings over the life of the asset. This was the case 2, right? This was case 2. Now what happens when the entity transfer the revaluation surplus to retained earnings at the over the life of the asset, over the life of the asset, over the life of the asset? Then tell me what was the revaluation gain here, revaluation reserve here? 300, right? This 300 will be transferred over these 3 years. So meaning thereby 100 will be out of this, 100 will be transferred to retained earnings. Now, so the balance of revaluation surplus at the end of third year, will be 200, right? So now I have a revaluation loss of how much? 250. I have a revaluation loss of how much? 250, right? So now this 250 should be adjusted with revaluation reserve, but I don't have the balance. Right? So what will I do? This 250 revaluation loss, I will adjust with revaluation reserve to the extent there is a balance. Any excess will be transferred to P and L. Clear, Nishan? Just give me a minute. Can you hear me properly, guys? Okay, fair enough. Thank you. Now, let's solve this question. This question will have everything, whatever we discussed so far. Okay, so let's solve this question and try to understand it. Okay, now, activity 3, this question is taken from your BPP material. Whatever question I will discuss, I will paste the questions in the notebook here so that you will not face any challenges. Okay. Now, so it says the list. First, let's read the question properly, then read the requirement properly, and then we'll solve it one by one. Okay, fine. So it says the list price of the machine, means the purchase price of the machine is this much. I have got a trade discount of this much. Delivery cost. Tell me, will this be forming part of the directly attributable cost or not? Will this be forming part of directly attributable cost or not? Tell me. Yes, it will form part. Setup cost incurred internally. Setup cost, installation cost, right? It will form part. So this is the cost at which the asset is capitalized. 8156 is the cost at which the asset gets capitalized. Now, notes. The machine was purchased on 1st October 2004 when it was expected to have a useful life of 12 years and a residual value of 2000 Okay, now understand. The Xavier's accounting policy is to charge a full year's depreciation in the year of purchase and no depreciation in the year of retirement or sale. Now, what does it mean? It says that, let's suppose my accounting year starts from April and ends in the month of March. Now what happens? Let's suppose if I purchase any machinery in the month of April, then definitely I'll charge the depreciation for 12 months. But if I purchase any machinery during the year, I will charge depreciation proportionately. That's what happens normally. Tell me yes or no. That's what happens normally. Tell me yes or no. But here it says that if I have acquired any asset during the year, okay, irrespective of when I've acquired, I will charge the depreciation for the full year. I will charge the depreciation for the full year. Now, and in the year of sale, irrespective of when I'm selling, I will not charge any depreciation. Okay. Now, please read it. JVS accounting policy is to charge a full year depreciation in the year of purchase and no depreciation in the year of retirement or sale. JVR has a policy of keeping all equipment at revalued amount. Means JVR follows a revaluation model. No revaluation had yet been necessary until 30th September 2008, when one of the major suppliers of such machine went bankrupt, causing a rise in the prices. Okay. Now, specific market value of the JVS machine was not available, but an equivalent brand new machine would now cost 15,200, including relevant disbursements. Now, I think if someone could relate to, you will understand why I explained the concept of current cost. Okay, Xavier's treats revaluation surplus as being realized through the use of the asset and transfers them to retain earnings over the life of the asset. Okay, the remaining useful life and the residual value of the machine remained the same. Year end is 30th September. What is the carrying amount now? Can you please answer these questions one by one? Please answer these questions one by one. First question is carrying amount on 30th September 20x5, purchased on 1st October 20x4. The cost is this much, the residual value is this much, the useful life is this much. Please calculate the carrying amount on 30th September 20x5. I have already received one answer, don't know whether it's correct or wrong. Second answer is also the same. So it appears to be the same, correct. But let me see. Any other answers? Anyone? See, 7643. Okay, 4 answers and all of them are same. 6 answers and all of them are same. So it appears to be correct. Okay, fine. So now let's calculate. What was the cost of the machine? 8156. The cost of the machine was 8156. Right? What is the depreciation? So depreciation will be 8156 minus residual value is 2000. So depreciation will be for 12 years and only 1 year has passed by. Right? So what is the value? 8156 minus 2000 divided by 12 minus 8156 is 7643. So this is the answer. Clear? Now, what is the carrying amount of the plant and equipment on 30th September 20x8? Okay, again, you have to read the question and try to solve it off. What is the carrying amount on 30th September 20x8? Okay, I've already received an answer from Jay. Jay, I don't know whether it's correct or wrong, but tell me other guys. 2 answers and both of them are same. Wonderful, guys. Wonderful. 3 answers and all of them are same. 4 same. 5 answers also same. 4 answers also same. 4 answers are same. Appears to be correct answer. But what about others? Five, 6 answers and all of them are same. Fine, it appears to be correct. Now, what is the carrying amount? Now, tell me what is the carrying amount on 30th September 20x8? Now, tell me it will be 8156. Now, when was asset purchased? 20x4 means x5, 6, 7, 8, 4 years. So, if you multiply this with 4, it will get how much? Tell me 8156 minus 2000 divided by 12 into 4 minus 8156 is 6104. Now, what is the fair value on this date? The fair value on this date is 15,200, right? But now this is the current market value. This is not the fair value. So I have to arrive at the current cost. So the current cost or the fair value is 15,200 minus 15,200 minus residual value is 2000 divided by 12 years multiplied by 4. So it is 15,200 minus 2000 divided by 12 into 4 minus 15,200 is 10,800 is the fair value. 10,800 is the fair value, and this becomes the revised carrying amount also. This becomes the revised carrying amount also. So answer is 10,800. Right now, what is the revaluation gain or loss? Tell me what is the revaluation gain? Revaluation gain is how much? 6104 minus 10,800 is 4696. Okay, I will answer this third number. Let's come here. What is the balance of revaluation reserve on 30th September 20x8? When we did the revaluation on 30th September 20x8 also, right? So same date, what is the balance of revaluation surplus? So it is 4696. Is it correct? Is it correct? Now, how much revaluation surplus is transferred to retained earnings in the year? Now, you have to answer this question. This question you have to answer. This question you have to answer. What is the amount of revaluation surplus that is transferred to retained earnings on 30th September 20x9?
What was the balance of revaluation surplus? 4696. What is the remaining life? 8 years. So I will transfer over the remaining life is equals to how much? 587 is equals to 587. So this is the answer done. Now, third point, which two of the following statements are correct when revaluing property, plant and equipment? All property, plant and equipment should be revalued, correct or wrong? All property, plant and equipment should be revalued, correct or wrong? Wrong. Why? Because we revalue a class of assets, not the whole of the assets. Okay, now the revaluation should take place every 3 to 5 years, correct or wrong? Wrong. Because it's not only 3 to 5 years. It can be done every year also, depending if the asset is if the asset is highly volatile, right? It says should take place, means mandatory. No, wrong. Right? Now, ideally, if I have to say, if first two are wrong and they are asking about two correct, so ideally, in the exam, if I would have been the student, I would have not read the other two. I would have directly answered these two. Okay, but yes, now since you are a beginner, I will recommend you to read, because you will get the understanding of it. Okay, now see, till the time you are not appearing for the exams, you have to read all the 4 points. Why? Because you will definitely get an understanding of the type of questions and the type of pointers that can come in the exam, because these are the same points which can come in the exam, and in the exam they might not give it like this. The seriatim might change, right? So you need to understand the logic for everything. Now, the revalued asset continues to be depreciated. Yes, they continue to be depreciated. We have already depreciated, right? The assets should be revalued to fair value if available. If the fair values are available, we have to depreciate, we have to revalue it off, right? So that's what is correct. Is it clear, everyone? Is it clear, everyone? Now, one question I have. This question we discussed, okay, definitely. But tell me, this question is a section A question or a section B question? This question is a section A question or section B question? It's a section B question, because I told clearly in section B, you will get a case study which will have 5 questions. See, one case study, 1, 2, 3, 4, 5. And these 5 questions will be linked to each other. See, once you calculate this carrying amount, this is linked to this one. This is linked to this one. This is linked to this one again, right? So all of them are linked. All of them are linked, right? So it is a section. It is section B question. This section B question. Okay. Is it clear, everyone? Is it clear, everyone? I will write here. Is it clear, guys? Come on. Wonderful. So this completes our discussion on, you can say, property, plant, equipment, IS 16. But yes, I will discuss one more thing, though very small point, but let me discuss point number 7, 4 and 5. Point number 5. Revaluation loss should be adjusted with revaluation surplus or revaluation reserve, as the name you might say. However, it needs to be noted. It needs to be noted that revaluation surplus should belongs to the same asset from which entity incurred revaluation loss. Okay, is this point clear, everyone? Is this point clear, everyone? You can adjust your revaluation loss with revaluation reserve, but for the same asset. Okay, if there is a revaluation reserve for other assets is existing in the balance sheet, you cannot do that adjustment. Okay, for the same assets. Is it clear, everyone? Please confirm, guys. Anyone having any queries so far? Anyone having any queries so far? For a single asset. For a single asset. Not for a class of asset. I'm talking about single asset. Now, next point, 7 was the point, right? 8, point number 8. Disposal of assets. Disposal of assets. So on disposal, what you do? Recognize the asset at its carrying amount, then recognize sale proceeds, then difference, if any, should be recognized as gain or loss on sale in P&L. In P&L. Is it clear, everyone? Is it clear, everyone? Okay, so that's all about you can say property, plant and equipment. This completes our discussion on property, plant and equipment. And one more small point you can write here is disclosures. Okay. In disclosures, you have to give estimate of useful life. Okay, estimates of residual value. Okay, then depreciation method used. Okay, cost model or revaluation model. Okay, then treatment of revaluation reserve. Treatment of revaluation reserve. So all these things you have to disclose in the balance in the financial statements. So this is all about your IAS 16 property, plant and equipment. Okay, now tell me guys if you have any queries in this one. Please tell me if you have any queries in this one. I'm not giving any break here because I'm wrapping the class itself. So after completing this property, plant, equipment, but I have to give a lot of assignments now to you. Okay, because you have 1 week time now, so you can solve a lot of assignments. So let me give you the assignments. Just give me a minute. So you can solve question number from 25 to 34. So you can solve question number assignments. Assignment is first one is read notes and workbook for IAS 16, then solve question number 25, 20, not 26, 25 you can solve, then no 26, 27 no, 28 no, 29 no, 30 no, 31. Okay, then 32, 33 no. Yeah, and then section B. Page number is 19. Section B questions, I believe you will not be able to solve. Okay, fine. These three questions only. Now, yes, I will. I'll discuss with you, Harshita, on that. Let me just give me a minute. But ACCAglobal.com. These questions are from your practice kit. Solve all remaining activities and illustrations in workbook. Then examiner just a minute, first. Then read technical article. Though we have covered everything in our class, but yes, you have to read it off. There are, I think, two articles which you can read. Three articles, not one, not two, three. Okay, so there are three technical articles, that is PPE, property, plant and equipment 1, part 1, 2 and 3. Now, from where you will get the technical article, I am sending you the link. Copy, and I am sending you the link here. This is the link to the technical article. This is the link to the technical articles. I will paste this link in your notes also. Okay, don't you worry at all. Link for technical article. Okay, this is the link for technical article, which you, and I've shared the link there also. So you can access it off from here. Okay, the name is PPE part 1, part 2, part 3. There are 3 technical articles which you have to read and accumulate all your queries. Now, the 3 questions which you are saying, if you are telling that you have not got the book, what I will do, don't worry at all about it. I will be sharing these questions as a picture of these questions in to you in the WhatsApp group. Okay, so that you can have it. Okay, for those who have not got the book. Okay, now, so this is what is your assignment for today. This is what is your assignment for today, guys. I am wrapping this class earlier only for one reason, because I don't want to start a new standard now. Okay, because it will just become challenging for you. Okay, since it's the start of the classes now. So what I want you to complete the standard completely over this week. Okay, complete the standard fully over this week. So on Saturday, I will take up 1 hour and discuss all your queries and start a new standard. Is it clear, everyone? Is it clear, everyone? Okay, fine. Now, there are certain queries which I have to answer. So let me answer those things first now. Guys, whatever queries if you have put but I have not answered, please can you send it again, because here the queries went up. I cannot see it off. What is the approximate time of completion of syllabus? As I already told in the previous class, I will be completing this syllabus by 20th of August. But when I say 20th, I mean to say everything. If you follow what I'm saying, then by 20th of August, you will be revising a syllabus for the 6th time. Okay, not only 1 time or 2 times. For the 6th time, you will be revising your syllabus. Okay, and all your syllabus, everything, questions, practice, everything will get over by then. Okay, everything will get over by then. Okay, is there any change from June 23 to September 23? Ideally, no. Yes, you can use June 23 book, but yes, the seriatim of the questions would have changed, so that you have to find it out accordingly. Okay, otherwise, no challenges. Will you take classes on weekdays? As of now, no, but yes, towards the end, I will take up. Not now. For cost model, only depreciation to be charged over years and no revaluation is done. For cost model, yes, no revaluation is to be done. We just charge depreciation simply. No worries. What is the procedure of study we should consider recording lectures or live classes? If possible, okay, please, that's a recommendation, a strong recommendation from my side. Attend my lectures, okay, live. If not, then definitely recording is also equally good, and you will get the query support from my end. There's no challenge at all in that. Okay. Okay. Around 6. I already discussed in the orientation lecture yesterday, so you can watch that orientation lecture and understand everything. How much time depends on students to students. Basically, what you have to complete all the assignments. Now, if you complete the assignments within half an hour, it's fine. If you take 6 hours to complete the assignments, that is also fine. That will depend or vary from students to students. Yes, sure. I'll definitely do that. Just give me a minute. Because my screen sharing has freezed, I believe. So allow me to share my screen again. Just a minute. Yes, which query you have? Tell me. Harshita, please tell me which question you have query. IUC, yes, you will get the recording, 100% backup of these lectures. Yes, these 3 notes you already have. Workbook you don't have, fine. You just revise from the notes or say, okay. These questions I will be sending it to you. Now these articles or these activities or illustrations you might not have, okay, fine. Technical article, what you have to do, this is the link for the technical article where you will get it off, okay. Now guys, those who have the book with you, the revised book, this book, I'm talking about this book. One of you have to take the responsibility to help the students who doesn't have the book right now. So you have to send the images of these 3 questions and the illustrations and the activities in the group. Tell me who will take this responsibility. Tell me. Very good, Gufran. Now, sorry, it's your responsibility, okay? Harsh, do you have this book's PDF? Do you have this book PDF? Ebook you will not be able to share, no? Ebook you won't be able to share. So fine, please send the screenshots to them. It's fine. And one of them, only not everyone, only one of you will send, okay? Now, okay, Gufran, very good. Now, Hamad, I have already discussed that in the orientation lecture. I watched that. If still you have any queries, you can discuss that with me. Okay. Now, Harshita, please discuss your queries with me. I believe you have query in this question, right? Then, which question, Harshita? This one? Above. Can you tell me the topic? Can you tell me the topic name? Okay. Decommissioning costs. Tell me. How you get 2,111? Fine. Tell me what is the discount rate, Harshita? What was the discount rate? Tell me what is the discount rate? Discount rate was what? Tell me. Discount rate was 10%, right? Now, so when you unwind, you will unwind also at 10%. So what was the value? 2,1,111, right? So 10% of this is how much? Tell me. What is the 10% of this? 2,111, right? Now, if you add this plus this, it comes to 2,322. Now, again, we calculate 10% of this. It comes here, right? Now, this plus this comes here, right? Again, we calculate 10% of this. Okay, 10% of this, 10% of this, right? Comes now. This plus this comes here. Now, again, we calculate 10% of this. Okay, now this plus this comes here. Again, we calculate 10% of this, and this plus this comes here. Is it clear, everyone? Is it clear, everyone? Come on, guys, tell me, is it clear, everyone? Harshita? Can you please answer, Harshita? Is it clear? No, everyone is busy. Okay, 10% of 28099 is 2809.9. Okay, so rounding of it is 2810. Rounded of it is 2810. Rounding of it, no? Fine. Anyone else having any other queries? Yes, that's it. It's okay. Anyone else having any queries, guys? Come on, please don't hesitate to ask your queries. Any queries, do discuss that with me right now. Come on, guys, tell me. Do you have any queries? Anyone? Okay, no, fine. That's all for the day, guys. Please solve all the assignments. Please solve all the assignments, and all of you, please yes, solve the assignments and get your queries accumulated. Somewhere in the month of July, I believe. July, you have to book. Okay, you have to book your exams in the month of July for September. Okay. So for all those things, you can discuss with our admin team, and they will guide you in an appropriate manner with the exact dates and everything. Okay. So that's all for the day, guys. Thank you. Bye.